There are 4 places that I like to begin my WD Gann campaigns. If you missed it, in the last video on this playlist, we looked at the power of WD Gann campaigns, where Gann took small amounts of capital, such as in Chrysler Motors or his October 1909 trading, and turned it into a large amount of capital in a short period of time, simply by taking a series of smaller trades within a large move. That's what a campaign is. And every trader, no matter how small their account is potentially only 5 to 7 good campaigns away from life-changing money. Many people think, oh, I've got hundreds or thousands of trades to take before I make it as a trader. No, 5 to 7 good campaigns, well executed, can be enough to set you up for life as a trader. This video is all about finding a great place to start a campaign. From there, we'll go on to look at nailing the entry into the campaign, having rules for adding positions, trailing stop losses, and how to identify profit targets, among other things. These will all be videos coming up in this playlist. So if you haven't subscribed to the channel, now would be a good time. A quick disclaimer before we begin, this video is for educational and informational purposes only and should not be considered financial investment or trading advice. Now, the key to starting a campaign in the right spot is the expectation of a strong move. If you're not expecting a strong move in the market, well, firstly, you've got to ask yourself why you're looking to trade it in the first place. But if it's not going to be a strong move, if you're only looking for a small 50 or 100 point pullback, you're not really going to bother setting up a trading campaign around that move. Gann gives us tools that can help us expect a strong move, and these are the places that we should be looking to set up our campaigns from. The first one we've already looked at in the first video of this series, and it's a roadmap. Gann teaches these under the heading of Master Time Cycles in his Master Stock and Commodities courses. And a roadmap is simply a previous period of the market that is repeating in the current market. Here's the example that we looked at in the first video in this series, where we had a roadmap on the Dow Jones, calling the current market, or what was the current market back then, near perfectly. As a trader, let's imagine that you're looking to start a campaign and we're somewhere in here. We're in the middle of this down run here. You're not going to be trying to jump in and capture the last little bit of this move here. Remember, this is the roadmap. This is the current market. What you would be doing is identifying on the roadmap chart, well, gee, this low is followed by a strong run up. This could be a good place to trade. So I'm going to look for a low around this area. This was April 2025 on the Dow Jones. And what we saw is the low came in within a few days of when it was expected. Roadmaps aren't going to be perfect to the cent and to the minute. They can be at times, but generally there's a little bit of push and shove there. That's where your swing trading and form reading skills will really come to help you as well. But you would look for an area like this on your roadmap to start your campaign from. Now, that's it. That's a potential starting point. And then you would look at the next major top or bottom, and that could be an area to end the campaign and to potentially start a new one as well. Don't overcomplicate it. Master time cycles like this, you can learn about in 5 minutes. You can read Gann's lesson on it. He gives you areas to watch. You go back and you look at those previous sections of the market, like 10 years, 20 years, 30 years, etc. You compare them to your current market. You look at the shape, you look at the timings, you look at the price, and you see which area of history the market is repeating. In my experience, the market is almost always repeating a section of previous history. It's just a matter of having enough market data to be able to see the cycle that is in play. So that's the first great place to start a campaign. Find a roadmap and find a good turning point on that roadmap that indicates a strong move. A couple of quick points on roadmaps for those who are new to them. They can stop at any time, so don't assume that it will last forever. The roadmap that I showed you in video 1 of this series lasted for well over a year, but they can stop and another roadmap will take over. They can invert, so you might be expecting a strong up move. It gives you a strong down move. They can sort of fade in and out a little bit, but when you consider roadmaps can be learned in 5 minutes, they're a very powerful technique. So that's the first place that we can look to start a campaign from. And in an upcoming video, we're going to take a look at nailing the best possible entry at the best point in the market there with a low risk and a high reward to risk ratio. Another way that we can expect a strong move in the market is to look for a price setup, particularly on bigger picture timeframes. Gann talks about price setups in how to make profits in commodities, and a really obvious one that pretty much anyone who's read at least one book on trading would be familiar with the concept of a double top or a double bottom. The funny thing is, though, people write it off as being too simple and say it's got to be more to it than that, so they dismiss them or they don't put enough time into them. Well, let's have a look at this move on crude oil. Late February in 2025, we saw crude oil basically double in price in a couple of weeks, spiking up there. Now, people would argue a move like that has come out of nowhere because at that time, the war in Iran started. And people say, well, you can't know that that's coming. But isn't it interesting? If you just go back a few months prior, in December of 2025, oil made a low at $54.98, $54.98 per barrel, which was a double bottom of the April 2025 low of $55.12 per barrel. Notice it didn't stop exactly on the point, but it was very, very close to that point. And the next day it came back above that old level. It hung around for about a month and then started to run up, making higher bottom, higher bottom, higher bottom, higher bottom, higher bottom, bang, off it goes to the upside. Now, obviously not every double bottom is going to work exactly like this, but that's what you're looking for in the market. Gann says to buy on double bottoms or on the flip side, sell double tops. It can be a little bit aggressive and a little bit risky. Personally, I like a little bit more going for a trade than just a double bottom or a double top. But that's a good, simple strategy for starting a campaign. Now, you may miss this bottom here. You might get the higher bottom, or the next higher bottom, or the next higher bottom, or the breakout when it breaks above these tops over here. Okay, but that's the bigger picture structure behind the campaign. It's also interesting to note there was a little double bottom as well. After the April low, there was a slightly higher bottom there, and the market had a good run up there as well. But obviously the stronger campaign is here from December up to March. So those are two places that we can have an expectation of a strong move out of. Number one is a roadmap turn, and number two is a setup. The third, which has probably been the most profitable for me over the long run, are price milestones or price clusters. Now, I'll show you what these are in a moment, but if you don't know how to find these and use them in the market, my suggestion would be to drop everything and learn how to do them because they're very, very powerful techniques. You won't call every top and bottom in the market with them, but there will be times every single year where you'll be able to get very, very close to the weekly and the monthly turning points by using these techniques. The two places that I learned them from, first, Gann's book, How to Make Profits in Commodities, and second, Safety in the Markets Active Trader Program. If you're someone who has a lot of time and you like a challenge, Gann's book, How to Make Profits in Commodities, it's inexpensive. If you want a faster method where you can learn it in a weekend, I got a ton of value out of Safety in the Markets Active Trader Program. You can check out their website there, safetyinthemarket.com.au. Let's have a look at a price milestone. This is the Euro US dollar, and this was the January low on the Euro US dollar. And what we have here has a few different names. You'll probably see it in your trading platform as a Fibonacci retracement. And Fibonacci would use milestones like, I think it's 0.382 or 0.618%. So you look at a market running up and then you measure what percentage of that move has retraced. Gann spoke about the 1/8 levels. So 50% obviously is a half, 62.5% is 5/8. And you can see here that the euro, after its big run up from September 2022 into mid 2023, it retraced 62.5% of that run, almost to the point there. Now, this is a price milestone. A price cluster is when you have two or more, I like to see three or more, but a cluster is two or more price milestones right at the same spot. It works a little bit like a brick wall. Imagine this 62.5% milestone is a brick wall. And then you add another milestone in, and it's like you've got double brick wall, so it's stronger. You add 3 or 4 price milestones in there, and one of two things will happen. The market will either run strongly out of there, or if it breaks through, it will run strongly to the downside there. So that's a price milestone. I will point out something here. For those of you, I know a lot of people will skim through a video like this. For those of you who are watching all the way through, here's a nugget of gold. Gann spoke about sections of the market, and he said markets tend to move in 3 to 4 sections. Elliott Wave says a very similar thing. Markets tend to move in 5 waves. And I've heard people describe the law of vibration this way, or one element of the law of vibration, as markets working in 3 moves as well. In fact, Gann himself talks about things happening in 3s. But have a look at this run down here into that 62.5% milestone. Can you see 3 distinct moves down? See these little double tops there? I mean, there's a spot where you could start a campaign to the downside. You had a strong move down there, a pull back up. A strong move down there, and a pull back up. And then a strong move down there. That third move down, 1, 2, 3, 4 sections down as well. Sections within sections. Now, I could talk all day about this. I'm actually going to do a video on sections of the market at some point, but that's something you might like to explore for yourself on the Euro US dollar. And what I would encourage you to do in this run here is mark the sections up and measure them in time and measure them in price. So how many days did it run? How many points did it run? And what you'll find is that you could have, with confidence, called this as a major low on the euro. Now, sitting on a 62.5% retracement here on a massive move like that, you can expect a pretty decent move out of there if it's going to hold. And again, sometimes it doesn't hold and people say, oh, see, look, Gann doesn't work. I'm not interested in those times. If it doesn't hold, I either don't get in the trade or I get stopped out for 1 unit of risk. But you're talking 20, 30, 40 plus times your risk if you can get a really good entry into a big picture move like that. And this is why these are really important areas to start a trading campaign. We're going to talk specifically about how to get a tight entry and to really nail that entry into the market in an upcoming video. But for now, just think about these areas for where you might start a campaign. So this low here, it was actually a price cluster. I'm only showing you one level there, but I can assure you that price point was predictable in advance. It would have been something that you would have been watching as a euro trader, and I know traders who traded that low. And speaking of that low, here it is on a slightly bigger picture. That's what has happened since that low came in. Almost a 2,000 point move up there. Not a bad place to launch a trading campaign from. And look at the higher bottoms, higher bottom, higher bottom, higher bottom, higher bottom, higher bottoms, higher bottom. Okay, running up to the top there, and eventually you get stopped out as the market comes back down here. But not a bad run on the market there. All coming from one simple technique of price clusters. Now, I've been in this field for over 20 years. I've done a lot of study. It's my passion. I love trading. I love studying Gann. I love studying the markets. I could talk all day about that, but I won't. I've worked with traders. I've learnt from traders. I've paid a lot of money to learn from many, many gurus in this field. Very few of them could actually call that low with confidence well before it happened. I'm talking weeks before it happened, to know that that specific level is where the market is going to. Most of the people who can do that won't talk about it, but thankfully for me, one person who did talk about it was David Bowden from Safety in the Market, and this guy's a hero of mine. He passed away on the 9th of June, 2026. May he rest in peace. There is no question in my mind that he was a genius, and I will forever be grateful for the trading foundation that I learned from David Bowden. He's well known for some market calls that he made in the 1980s, where he predicted the 1987 crash high and predicted the 1989 crash high and the 1991 low, and a number of other trades as well. In the last video, I spoke about a campaign on the SPY 200 that I entered. That was off a forecast of David as well. So his time forecasts are well known, but where I think he is criminally underrated is his price and form reading and swing trading skills. It's second to none. It's world class. If someone said to me, I'm going to erase everything that you've learned in your 20 years of trading, but you can keep one course or one mentor, it would be David, because he simplifies it into a system for you. As I said earlier, it's not going to call every single little flick up and down in the market, but it's going to help you find areas like this on the euro and nail those price forecasts really, really tightly. And I don't know anyone else out there who can do it to that extent with that tightness. Now, I am studying other things in the market and other lessons from other mentors because there's deeper knowledge that I am trying to get, but I wouldn't be in the place where I can spend my time doing that and have the money to pay sometimes six-figure amounts to learn from people if it wasn't for the trading foundation that I learned from David Bowden. So credit where it's due. A massive thank you to David. Obviously changed my life for the better, and I know he's changed many people's lives for the better as well. The company he founded, Safety in the Market, you can find them on YouTube there. Just type in Safety in the Market. You'll find them there. Darren is the lead trainer there at the moment. He's a friend of mine. He's a good bloke. He's a really good trader. He's very patient and kind as well. And he's put some good videos up there as well that you can check out. And if you want to learn how to find trades like that euro example there to start a campaign, you can check out safetyinthemarket.com.au and have a look at their active trader program there. I was a student of Safety in the Market. They were the first trading company whose techniques actually paid for themselves, and I was able to make the money back from them. And for a period of time, I taught at Safety in the Market, but I'm no longer affiliated with them. I don't get anything for recommending them. I just know that it helped me. And if you're looking for a bit of help, that might be something that might be of interest to you. So you can check them out. So those are the first three expectations of a strong move: a roadmap, a price setup, and a price milestone or price cluster. Funnily enough, the fourth one is the one that everybody wants to have, but it takes by far the longest. It's the hardest. It will send you down so many frustrating roads. It will send you through hundreds of hours of decoding and reading and research. It's really hard, and people think, oh, well, it must be really good, and it is, but it's not the only way that you can enter a campaign. It's planetary and law of vibration cycles, which can give you starting and end points for your campaign, and I'll show you how that works in just a moment. But before we get there, the point that I want to make is don't overlook the easier stuff here because you think, oh, it's easier, it's in the public eye, it's easy to get, so it's not valuable. It's all valuable. As I said, that trade on the euro there, 1 or 2 campaigns a year like that, you'll notice a massive difference in your trading very, very quickly. The master time cycles, as I said, you can learn those in about 5 minutes, and price setups like double tops and bottoms, pretty basic stuff, but they're all powerful places. But we'll take a look at cycles as well for an expectation of a strong move. Here's a quick example of how they will work. In my opinion, you need to have at least 2 cycles working together to get value from them. So here's a simple example from December 2023 on the Australian dollar, US dollar. The purple line here is a larger cycle running from a high to a low. So naturally, the date up there would be a potential starting point for your campaign. Along the way, there are smaller cycle moves as well. And these can be places where once that lower top comes in, you can trail your stop losses down there, or you can add to your position to take a larger position, etc. But you can run your campaign based on those cycles there. That's the pinnacle of where you want to be as a Gann trader, especially because all of these cycle points can be worked out mathematically in advance so that you know where they are going. But in terms of these cycles, that will take you time to set up. Even if I told you today, go and look at these cycle lengths here, it would take you time to set up and to understand and to work and to get a feel for and to get experience with them, etc. And that's even if you have the right cycle lengths there. And the pricing stuff there, I'm yet to see someone do consistently. I'm sure it can be done, and I have seen it done, but people don't tend to talk about it in public. It's held very, very closely. But as I said, those price forecasting techniques in that Safety in the Market Active Trader program, it only costs a few grand, but if you do the maths, have a look at the position sizes that you take on a trade like the Euro US dollar, see if you can capture one move like that, a 2,000 point move, and you can make your own mind up on whether that would be valuable to you or not. Now, to find these cycles, we're always pointed back to the Tunnel Through the Air. I've actually recorded an audiobook of Tunnel Through the Air, and you'll find it on the channel here. You can go through chapter by chapter. I enjoyed it for the story. I know a lot of people hate the story. They can't stand it and the poetry, and it can be a bit slow at times. But in my understanding, Gann has hidden all his most powerful techniques. He's coded them in here, and it needs to be pulled apart layer by layer. And that's something that can take you 10, 20 years plus to do that. It's not an easy task to do. And that's why I put it last on this list for areas to start a campaign, because the first 3 items on that list that we looked at, roadmaps, setups, and price milestones, any one of you can learn 1 or all 3 of those in a weekend. Roadmaps you'll find in Gann's stock and commodities courses. The setups and price milestones I learned from David Bowden's company, which is called Safety in the Market. And you can learn those quickly, and you can start using them now. If you're determined to go down the road of cycles, just be aware it is going to take you time to get there. That's all for this video, a little bit longer than the previous ones, but coming up in the next 2 videos, number 1, I want to take you through sections of the market, which is a critical tool for trading campaigns. I was going to do this a bit later on, but I think I'll slot it in next. And then after that, we'll look at how to nail your trade entry points. So again, if you haven't subscribed to the channel, please subscribe. If you got some value out of this video, I'd appreciate it if you click the like button and leave a comment below. Let me know which of these 4 is your favorite way to enter a campaign. And again, go back over your market and have a look at some of the moves and see if you can identify a roadmap. See if you can identify a setup like a double bottom or a double top. See if you can identify a price milestone, or even better, a price cluster. All right, that's all for this video. All the best, and I'll see you in the next one. Bye for now.